These are the two major reasons why someone's a break-even trader. They're taking mistake trades, and then they're also not taking winners. So what happens is they're basically just break even. They're somewhat profitable, but then they lose three, and then they're back to negative. Maybe they lose another one, then they take a winner, get to a little bit into profit, miss a winner, take two more losers. They keep staying in this break even range. And that's something that happened to me. And it's something that I've worked on. And I believe now I'm ready to not take mistake trades and to start scaling up the account. So, what are the reasons? Like, why would someone take a mistake trade? There's a deeper reason than just, oh, like I wanted to make money. Probably the main thing is I want to trade, I want to do something, and I want to make money. So, the belief is already wrong that you need to make money every day. And maybe there's also some slight frustration that the market's not giving you an opportunity for your edge. So you're trying to rationalize an opportunity that's not fully your edge, and then you take it anyway, you lose it, and then afterward you see it and you're like, oh, why did I do that? And then you get on into this self-criticism type of talk, and then you're like, okay, next time I won't do it. But then it just keeps happening. There's a deeper reason. And it starts with your beliefs of trading. If you believe you can make money every day, if you believe that you know what the market's going to do, even if it's like slightly, like during the trade, or just before the trade, or whatever, if you believe you know what it can do, and you believe you can make money every day, then you're going to be looking for opportunities to make money every day. And when the market doesn't give you that, you're going to be frustrated at some point, and you're going to try and rationalize a reason why you should take this trade that's happening at this very moment. Your job is to acknowledge it, recognize it, be aware of it. Be very aware of how you think. But the problem is that these things keep happening. It keeps happening, and you're like, why can't I fix it? I can't even trust myself. So the belief is the crucial thing, is that you believe that you can make money every day. You believe that you can predict the market. And the problem is that you can't really do either of those, not for a long period of time. Maybe short term, but not long term. And then you'll eventually get frustrated. That turns into anger, and you'll start revenge trading, which is taking mistake trades. So that's the first reason. Now, the second reason, so I just talked about taking mistake trades. Now, the second reason would be not taking winners. There's many reasons for why somebody would not take winners. But let's just go over the basic ones so that this can cover the majority of the reasoning behind why you would not take a winner. So you have technical analysis, you got mental analysis. I guess you could say there's an emotional analysis, but I kind of see it as technical and then mental side of it. Like mental and emotional kind of together. So let's say there's a technical reason. Like for me, for example. Let's say I'm looking at too many things, and last week I see a 1 hour chart. I trade on the 5 minute and I enter on the 5 minute. So I'm looking at the 1 hour chart, and the 1 hour candle just before I'm about to enter, it closes, and I enter in the next one. Well, I would have, but I didn't because that candle didn't look right. Didn't look right. But if I block that out and just understand that the market is at my level and it's giving me a signal to enter for another opportunity in this process of trades, like the next 20 of them, not just thinking individually, then I would have just took the trade. But because of my technical analysis, I decided not to take that trade, which tends to be winners a lot. The market is designed to confuse most people most of the time. That was a quote from one of, I forgot the guy's name, some famous trader in the 1900s. I remember that. It stuck with me. So it's not always just so clear, like, oh, this is a trade. It's setting up so smoothly. It's designed to confuse people. So that's a technical reason. You're looking at too many things. Look at 2 to 3 things. That's really all. Okay, it's at my level. This is happening. This, done. Boom. The trade is, I will enter on this trade if it gives me the right signal. So, when I say right signal, I mean, like for me, I'm entering under the previous candle. So if it breaks below the candle and it's at my level and it comes below and breaks it, I enter there. So whatever your setup is, like that's mine. You got to have an exact system to how you enter and be consistent with it over a long period of time. Now we have the emotional side of I lost 4 trades already. I'm just giving an example. I lost 4 trades. I don't want to lose another one. What if I blow my account? I only have this many tries left until margin. I got to pay for this. I don't want to lose again because you have this belief that losing is bad and hurts. Which it's not great. You're not going to be happy that you lost, but the point is to minimize that effect as much as possible. So what will happen now is because of your emotions, you will not take the trade because you are fearful. There's a lot of uncertainty. What's interesting is that fear and greed, I think, are confused sometimes. So let's say you don't want to take the trade because you don't want to lose money in your bank account or in your trading account. I would say that's more greed, wanting to keep on to everything. It would be fear if you don't want to lose the trade. It's a little bit different. Could they be correlated a little bit? Yeah. But let's give another example. It's coming down. You're in a short, and you flatten the trade early before it gets to your target. It would be fear if you are thinking, I don't know if it's going to come to my target. It would be greed if you see the P&L and you want to just close it so that you can capture that amount of money. So it's different, actually. It's not fear if you're thinking about just closing it out to get that money. You can have confidence that it's going to continue to push down. It's still more of a bearish move. But if your intention behind closing it is to capture that money and you don't want it to come up and break even or stop you out, then that's greed. So there's technical reason why you wouldn't take a winner, and then there's an emotional reason. If you don't have a true edge, then it could be either one. Once you get a true edge, then the emotional side starts to come in, the psychology behind trading. And it's really important to be confident in your setup long term and know your edge. My problem was I saw that happen one other time, and I used that reason to rationalize why I'm not going to take the second time I've seen this thing happen. Because the first time lost. So that's not a valid reason unless it lost 10, 20 times in a row, or it's just like significantly less probability of winning to where it actually doesn't make sense and it just break evens over time. Like I only win 2 out of 10 of them or something like that. My win rate is probably like, it's somewhere around that 40, maybe 50%, but it's around there. I need more data over time to really know that. But those are the 2 reasons, man, that why someone would miss winners, not take them, and then also take mistake trades. And that's why someone's break even. So once you can get out of that time of not taking those mistake trades, and then you can size up more on the winners, that's when you can start scaling it up. It's a magical moment, man.